focus on the imbalance after the market structure breaks. So this big candle here, it breaks down. Look at the next candle. It opens and trades higher and stops right there. So from this candle's low and this candle's high, when this candle starts trading, as soon as it opens and it runs right up into that, that's a short. You can go right in there, sell short, be done. Now, where's your stop going to be? Well, you can put it above this high here, or you can put it above this candle's high, whichever your risk parameters allow for, okay? If you're trading the micro, which is, again, it's not a lot of money per tick, so the multiplier for that is very, very small. If you trade the larger full futures contract, and if it moves 100 points, and they can do it real quick, it can burn you pretty bad. So you may have the leverage to trade with a discount broker. Okay, you may have the initial margin to trade with a discount broker, but you may not have the wherewithal and the skill set to navigate this market. And that's the only thing I'm trying to provide here as an alternative, because there's a lot of individuals out there that will promote the idea that you can go out there with a discount broker and just clean up. Yeah, if you know what you're doing. But you don't need a discount broker to be profitable, okay? Looking at this further, we're going to look at the logic in here. And I want you to think about after this forms and you see that as your choice setup or entry. If it starts to move lower, you can still get in it. There's no reason not to think that you can't get in it here or in here. It's close to or in close proximity to where that area is as an entry. Once we take out a low, though, once that occurs, then it becomes a matter of your chasing price. And if you try to get in, especially if you like use a market order, you may see it trade right to this low and say, okay, now I believe it's going to go down. You put a market order and sell short, and then slippage gets you down here. And it creates a larger area of risk that you have to assume, and it's problematic. You want to learn to trust going short when the market's going higher, and that feels scary at first. But once you start seeing this pattern form, it becomes easy to trust it. And in fact, you want to be doing that. You want to be selling short, expecting lower prices right when the candle's going up. And retail traders can't grasp that many times. It's just like it goes against the logic because they think I got to have confirmation. All the books say I have to have confirmation. And that's somebody that's coming in late.